Hey everybody, Cantonese Cat here. I want to introduce you to a collaboration here with Luca. Goes by the handle on X of Cryptic Trades. Please feel free to give him a follow if you enjoy today's content, as well as maybe subscribe to his YouTube channel here as well at Cryptic Trades by the same name. He is one of the most humble human beings there is that I've met in general. And I was very, very lucky to run into him. He does these spaces on X as well. And he shares a lot of great ideas. He is very unemotional when it comes to charting, very objective. And I enjoy his content very much. So please feel free to give him a follow and then enjoy the collaboration that we have here. Bye.
Hey everyone, Luca here. Thanks for jumping into another video. Today we have a special guest with us, Cantonese Cat. How are you, man?
Hey, I'm doing okay. Thanks for having me, Luca. Really looking forward to this collaboration after the space that we had last week.
Yeah, man, it's been an awesome discussion, and I'm looking forward for more collab videos in the future as well.
Yeah, let's do it.
Yeah, we have Bitcoin, and what we see here has been really interesting over the last couple of days. What we've seen is that a lot of people have highlighted correlation with what happened back in 2021 when Bitcoin has actually swept the highs here. And as we see back in 2021, Bitcoin has swept the highs at these levels. And what's interesting about this is that after it swept the highs, we have basically entered the bear market. And now a lot of people seem to highlight this idea that we may be in a similar scenario once again, where Bitcoin has swept these highs and that now we're entering a bear market. So what are your thoughts on this? And how do you see us moving forward?
I mean, I think that you can't just simply, use one thing to make a determination. It's a very different macroeconomic environment. It's at a different part of the cycle, both in terms of Bitcoin dominance, both in terms of, the small cap stocks versus large cap stock market versus the liquidity cycle where we're at right now. There's just a lot of really major differences between the environment that we're at right now versus back then. And on top of that, there are also a lot of other indicators that show a lot of major differences between the two. So I'm happy to see like the case for these two things looking the same. Like, are there any concerns that you have based on looking at these fractal that they might actually play out to be about the same?
So over the last couple of days, the way we reversed is very interesting because back in early April, back in late March, we've had all of the fears around tariffs, all of the uncertainties around the state of the macroeconomic environment. And since then, we have reversed in a very interesting manner where a lot of people have increased their cash positions at these levels because they were anxious about a potential bear market or a potential recession because of tariffs. But the way we reversed is instead of having substantial pullbacks along the way, we had these shallow consolidation phases that have preceded each of the impulses up so far. And this is very interesting because it didn't give sideliners the opportunity to entry lower. Therefore, the people who had cash and who increased their cash positions at these levels are now on the sidelines. And what's really interesting about this is that until now, we didn't have any substantial correction. Now is the first time when we have one and people aren't buying because they are saying that we may be in a similar situation to the one we've been back in 2021. So this is the first pullback that they're having. This is the first pullback that they wished to buy and to entry lower, but of course they have a strong narrative that they tie themselves to in order not to buy. So the way I see this, and I would like to hear your thoughts on this thesis, is a thesis I've developed around a potential emotional gap in the coming weeks, which is something similar to this. We've seen it happening the first time back in September and November of 2024, when from a state of extreme fear, where people have increased their cash positions, we then had a phase of disbelief where people didn't actually believe that that was the true reversal. Then we had an emotional gap that formed on the charts. And eventually, bears who were wrong on their thesis and non-believers who didn't believe that that was the true reversal then started to buy and acknowledge that they were wrong. But at that point, it was too late for them as the distribution phase was already there. So I think we may be in a similar situation once again where we're in this period of disbelief and the people who increase their cash positions here haven't entered along the way, didn't really get the opportunity to buy. And when they do, here, they aren't buying because they are saying that we may be in a similar scenario to the one of 2021, which is exactly why I don't think we're in right now. And I believe that this may be the last period where we could get an entry at these levels before we eventually have the next move to the upside. So, what are your thoughts on this?
I mean, I completely agree with you. The sentiment doesn't match. The global liquidity cycle doesn't match. There are a lot of things that I think that this is the sort of like the final consolidation before breaking out. Because we've also, if you just look at the screen, like even on your left side right there, you can see that we kind of broken above the the liquidity level roughly, and we're kind of back testing that level. That's kind of what it looks like to me. So
So
I
you're talking about the like the
exactly,
support
yeah,
range.
exactly. So I
Yeah.
think that we're kind of broken above that, and we're just kind of back testing that liquidity zone right there. And once we're able to confirm, get some solid footing, I think this thing is going to take off. That's what I'm seeing here, and the higher time frame stuff supports that thesis more as well. So.
Yeah, definitely. I think that right now a lot of people are too zoomed in on the charts. A lot of people are tracking too much the low time frame price action. Both bears have a good argument in saying that there are some clear bearish divergences formed right now on the charts. When we go on to the lower time frames, we see a clear bearish divergence. So while the price has formed a higher high, we have technical indicators that have formed a lower high, suggesting that this move to the upside might be weakening. Now, on the other hand, we have bulls also having a strong argument is saying that this phase could be very similar to the one we've seen in the past. Since we bottomed in early April, this phase could be just another consolidation range to the one we've seen in the
Mhm.
past that have preceded each of the moves up so far. So I think that since both sides have a good argument, both sides might be wrecked on the low time frames. So what are your thoughts on that?
I think that the bearish divergence that you're showing has already been played out, because when this price went up and RSI went down, we did have a retracement already, and that happened over the last few days. So I think that if anything, if you want to pull out like the RSI again, I actually see there's a lot of hidden bullish divergence that have been building up for a very long time. As price has gone up, RSI has actually gone down. So I actually see a lot of like hidden bullish diversions building. Exactly, yeah, exactly.
Yeah.
Whereas the original bearish divergence has already played out, and RSI has cooled down like it should.
Yeah, I mean, we've seen something similar happening here once again,
Exactly,
and this was a fake out.
yeah. And it was building a
Now,
lot of hidden bullish diversions there too.
yeah,
With that move up and RSI actually cool down, it did what is necessary for you to cool down RSI to move up higher.
yeah, definitely.
Yeah.
And I also think that there are also a lot of other metrics that sort of confirm that the top isn't in right now. I have always looked at something very interesting, and that is the correlation with altcoins. Yeah, so when we look at the correlation between Bitcoin and altcoins, we see something very interesting, and that is Bitcoin has formed a new all-time high, while altcoins are still well below their prior all-time high back in December, which is telling me, and this is where I want to hear your thoughts as well. I believe that altcoins tell a very important story about the risk appetite in the markets. And a lot of people seem to overlook this. A lot of people seem to overlook the importance of how altcoins perform, of the Bitcoin dominance itself, which is something that we'll get on in just a few minutes. The fact that altcoins have underperformed over the last couple of months against Bitcoin is telling me that there still isn't enough risk appetite in the markets in order to lead to a distribution phase. Therefore, I don't think that the correlation with the 2021 fractal is correct. Now, when we go back to 2021, we actually see that the total three has formed a new high as investors were a lot more euphoric, as the risk appetite was extremely high. That led to a distribution phase and eventually preceded the bear market. So I'd love to hear your thoughts on this.
Yeah, I don't think that the bull market is going to be over if Bitcoin dominance is like near the top. Because like I said, traditionally, as the bull market evolves and as the market becomes more euphoric, generally you're going to have more of a risk on appetite. Generally, rotation would happen where things end up rotating towards more risk on assets. That just simply hasn't happened. If anything, the common knowledge right now amongst the market is that you don't make any money from altcoins and that Bitcoin is, near the top. That just doesn't really make a whole lot of sense to me either. I mean, you can make the same argument with miners too. They haven't really done anything. Actually, to me, it's actually a good sign that maybe the cycle is going to be a little bit longer and the euphoric phase hasn't kicked in yet.
So now moving to the Bitcoin dominance, what we see here is actually very interesting because a lot of people have hoped for an alt season over the last couple of years, but the Bitcoin dominance kept on going higher. So as you said earlier, I think that as long as the Bitcoin dominance remains high and remains higher for longer and altcoins continue to bleed against Bitcoin, it shows that the most likely outcome will still be that Bitcoin goes higher because the risk appetite plays a major role in shaping the markets because market makers have always used the emotions of retail investors to either accumulate, like we've seen back in 2022, or to distribute, like I think we're going to see in the next couple of months. So actually, what happened here back in 2021, what led to the cycle top was Bitcoin dominance going lower because investors were following into the markets, were buying into the riskiest assets possible. They want to make gains because they missed out on most of the bull market, and that's the sad story about most retail investors is that most of the times they miss out on the majority of the bull market, like we've seen the case with most retail investors in 2023, 2024. A lot of people believe that altcoins outperform normally Bitcoin in a bull market, and they were wrong on that. So now I think that when we'll eventually see weakness in the Bitcoin dominance, and this is one of the most important metrics I'll track moving forward, when we'll see weakness developing, something similar to this before eventually it rolls over, that's when the warning signals will emerge for Bitcoin as well. But as long as the Bitcoin dominance stays at these levels, or maybe it goes even higher, I think we have no reason to worry that the cycle might be ending. Would love to hear your thoughts on that as well. How do you see the Bitcoin dominance playing out in the next couple of weeks? Do you think we could move on a bit higher, or do you think we have topped out and that we're now in a complacency phase?
Yeah, I mean, I think as I've been tracking Bitcoin dominance, I kept seeing like bearish diversions, and it just kept on pushing through bearish diversions, just kept on going higher. So the way I see it is, and also like Ethereum dominance and also Ethereum over Bitcoin pair will probably give you some additional clue to, which I think you also probably want to talk about. I think there are some character change when it comes to the Bitcoin Ethereum pair that hasn't been there before. If that actually plays out, then the Bitcoin dominance might be getting near its top, but I guess, a lot of people have been saying that they've all been wrong for a very long time. So, and again, it keeps on going out on bearish divergence. So it's hard for me to be sure, but I do think that based on looking at how Ethereum is behaving and how it's been showing some relative strength, over the last few weeks, that we might be entering, a little bit of different phase of the crypto market. What are your thoughts on that?
Yeah, I mean, let's move on to the ETH to Bitcoin pair and let's see some confluences right there. So moving to the ETH to Bitcoin pair, something I've been tracking over the last couple of days is that it has reclaimed this very important support level. So we see here that it has acted as a major reversal point in the past, back in 2021. Also, it has acted as this reversal point back in early February of 2025. Then it has lost the support and now it has recovered above it. And it seems like it has been consolidating right above this very important support range. So what are your thoughts on that? Do you think that we could be consolidating right now for a couple more days before we eventually have the next move to the upside? Or do you think we could break down once again and maybe chop a bit more in this bottoming range?
That's a very tough question to answer. I think currently the behavior that is exhibiting right now, it looks like it wants to hold that area. It looks like it wants to maybe just kind of trend sideways. Because Ethereum actually has been outperforming a lot of other altcoins too. And during the process, actually, it's been holding up against Bitcoin extremely well, which is uncharacteristic for as to how it has been behaving over the last year. Is it possible for it to dip down underneath that zone and form a higher low? I think that's entirely possible. Yeah, that would not be a bad thing, to be honest. But I don't think that absolutely has to happen because it looks like it's kind of already forming a cup and already formed this handle. And it looks like it wants to maybe break above here a little bit.
Yeah, I definitely think that Ethereum is close to outperforming once again. Something I've been tracking over the last couple of months is how monetary policies have impacted the performance of Ethereum. Now, I think that Ethereum to Bitcoin also tells a story about risk appetite in the markets. We have when we were in a quantitative easing environment back in 2020 and all throughout 2021, the ETH to Bitcoin pair was going up because risk assets were outperforming. Now, there are also some other similar pairs to this, like the IWM to SPX pair, which shows us how small caps are performing against the traditional equities in the S&P 500. And basically, what we saw is risk assets underperforming against the traditional and safer assets because we were in a quantitative tightening environment. So when the Fed has started to step away from their quantitative easing measures back in 2021, and then they have officially ended their quantitative easing program back in 2022, then they also start to raise rates and so forth. That's when we saw the ETH to Bitcoin pair topping out here. And then later on, we saw Ethereum bleeding against Bitcoin because investors were no longer willing to take on that risk. And since liquidity was flowing out of the markets, which we see here reflected in the Fed's total assets, risk assets, of course, underperformed. But now, since we also saw this week in the latest macroeconomic data, the PCE year over year numbers came in at 2.1%, which is right around Fed's target. Therefore, I think that if the Fed finally declares their victory against inflation and they step away from their quantitative tightening policies, that's what I think could lead to the total assets bottoming out, and then secondly to the ETH to Bitcoin pair also bouncing pretty nicely. So what are your thoughts on that? Do you think that monetary policies play such a major role in shaping the market?
It is absolutely beautiful. I don't know how to even express it. It makes perfect sense in terms of the way that you're laying out. I think that markets and asset prices are all tied to liquidity that's available in the system. And I think that's also a similar reason in terms of even for the stock market, why small caps have been underperforming large caps for so long because of the risk appetite. And I think the same concept applies to Bitcoin and Ethereum, where Bitcoin's the big dog and Ethereum is like the transitional phase to the small dogs, if you will. So it makes perfect sense that if Ethereum is going to start recovery, that might be a sign, or vice versa, that there's going to be some change in monetary policies that will allow more liquidity in the system. I would also argue that I think we already have a lot of liquidity in the system already printed by other countries, specifically with China, because their stock market has already recovered by a significant margin over the last year. But I think that the real phase really has to come from the US small cap liquidity, and that also ties with Ethereum and altcoins. Basically, they behave very similarly based on the large cap and small cap transition with both crypto and stock market.
And if we look at what happened in the prior cycle as well, we find something very similar to this, where the Fed was in this quantitative tightening environment. They were reducing their total assets while the ETH to Bitcoin pair was going down, as we see here. And then when the Fed has stepped away from their quantitative tightening measures back in 2019, that's also where the ETH to Bitcoin pair bottomed out. Because the markets have started to price in new liquidity that would enter the markets. That was the macro bottom in the ETH to Bitcoin pair. So I think that a very similar thing could happen right now as well. Now, I also think that tracking how altcoins perform determines the broader cycle. So we can make a lot of money by investing in altcoins, or we can make a lot of money by investing in risk assets. But we must think about the fact that they represent only short-term opportunities and not long-term reliable ways through which we can make money. And this chart reflects exactly that. We can take advantage of these short-term opportunities once we enter certain periods of irrationality in the markets, but we must always think about how do we plan on to rotate those gains? Because some things I noticed, especially in prior cycles, when we were in this top formation here back in 2022, or when we were back in 2017, that's when the new paradigm narrative hits the markets. And that's when a lot of euphoria emerges, because that's always when altcoins massively outperform Bitcoin. That's when a lot of people start to believe that they have found the second Bitcoin, that they're buying it low. The reality is that altcoins outperform over a shorter period of time before they eventually bleed back to the king, as we see here.
It always does. I think right now liquidity has been flowing nonstop into the king, and the reality is this: the narrative that's being developed right now is that Bitcoin is king. Everybody should pile into Bitcoin, and anything that actually follows Bitcoin is good. You know, like And like Ethereum altcoins, miners, they don't really follow Bitcoin. Bitcoin's king. Bitcoin's king. Nothing like I regret so much for investing in other things than Bitcoin. That has been the narrative for pretty much the entire year now, if not like year and a half. Eventually, that narrative is going to break because this is common thinking, and the market doesn't really like to be complacent to what people feel or think. It doesn't care. Whenever it's something that's been going in a trend for a very long time, it reverses. Same thing. Like I don't really think that Ethereum is going to bleed and just keep bleeding down. I mean, I think the next time when Ethereum is going to really truly have like a big crash is when people are talking about the flippening again. Like I don't think that's really even a thought right now. Like people even like they've just been making fun of Ethereum for a very long time. Even when we were talking about our spaces last time, the sentiment for Ethereum is extremely poor. People don't think that Ethereum is even like fundamentally they're questioning it. So I think that we might be close, you know. That's kind of how funny how these things work, right?
100%.
Everybody, hey, just wanted to share my screen here as well. We were talking about Ethereum dominance and also talking about Ethereum over Bitcoin. I thought that it was a very, good point that you have too, because they're basically hitting the very, very same level like it was before. But another thing I really do want to share, by the way, I think if this month closes, this is a monthly chart. This would be a bullish engulfing candle for the first time ever. Maybe like, well, not ever, maybe like since here, but didn't really work out. But one really interesting thing to look at is Ethereum dominance. And this is the monthly chart, and the Ethereum dominance has basically hit the all-time low levels over here, around like 7%. And as soon as we got there, we got this huge bounce back up to like 9.5%. So Ethereum is only 7% of the entire cryptocurrency market cap. Isn't that crazy? But right now it bounced get closer to about 10%. We also have a little bit of a bullish engulfing candle. The other thing I wanted to show too that I thought was pretty interesting was if I look at one thing that I generally look at, which is the Bollinger Band. And the Bollinger Band gives me a lot of clue in terms of what price action would end up doing soon. Because if things are going sideways for way too long, then you have the Bollinger Band squeeze. And whenever it's squeezed for a long time, basically it tells you that we've gone through a period of no volatility and that huge volatility is going to go up or down. And you have a Bollinger Band expansion when that happens. The um, the longer it spends on the upper part of the Bollinger Band, the more likely it's going to explode to the upside, and vice versa. You know, the longer it spends at the lower part of the Bollinger Band, the more likely it's going to explode to the downside. I think we see a very clear trend change here on the daily chart in terms of the Ethereum dominance because it's been a downtrend here forever. And for the very first time, this is actually a convincingly uptrend where you just have a higher high over here compared to that. And we're trying to find a higher low. I don't know how low that low is going to be. But the interesting thing is we've also gone sideways over here for a long time, and the Bollinger Band is starting to squeeze, which tells me that there's going to be a huge move that could happen. And because it's spending more time on the upper part of the Bollinger Band, and because it's bouncing off of the 20-day moving average, I suspect that the next move is going to be up when the Bollinger Band expands and when a volatile move is going to go up. What do you think about this?
No, I definitely think you're right on this. Way I said we're approaching a period of risk on and irrationality in the markets. So a thesis I've covered many times before is that the transition from monetary policies isn't bullish in itself because it signals that something has to change in the path of the economy and the
Mhm.
path that the economy is headed towards. So the intervention itself of the Fed isn't bullish, but the environment leading up to it is.
Yeah.
And I think that this is definitely reflected in how risk assets have performed over the last couple of days. And this is also why I think that altcoins are primed to outperform for the first time in such a long period of time because of this transition into this risk on period. So yeah, I think there are some really interesting confluences, both on the technical side, as you have highlighted earlier, as well as on the fundamental side.
Mhm.
And I think all roads lead to Rome. And that is that we are nearing the end of this bull market and that risk assets tend to outperform best right when we near this period.
Yeah, I think so too. And you can see it in the charts pretty clear because this is like a higher high even compared to that right there. This is a clear change of character that it hasn't exhibited for a long time. There are a couple of things I wanted to talk about too, first of all, is I don't know whether or not the bull market is definitely over. I don't think anybody can really say that. I don't think it is because I think that if you're talking about the last fractal where you have the the like slight higher high here, and that was the top back in November 2021. There is a clue that tells me that I don't think that the current situation is going to be the top because I think that a lot of people might have neglected the parabolic bull phase of Bitcoin over the last two bull cycles is correlated with the parabolic um, bull cycle for the Chinese market. If you look at the Hang Seng Index, which is basically the Hong Kong exchange, if you have the parabolic bull phase of Bitcoin, it always is accompanied by a huge run up of the Hang Seng Index, which tells you that a big part of the liquidity is not just coming from the Fed, but it's also coming from China as well. Which makes sense because they are basically the second biggest, global liquidity source, and they are printing money right now. You know how we know because Hang Seng Index has been forming higher highs and higher lows here on the monthly chart, and so has Bitcoin. It's basically doing the same thing. But has we really had that big parabolic bull phase, for Bitcoin where it correlates with like the bull off top for Hang Seng? We really haven't had that. It's just been systematically stepwise on the way up, right? I think it's important. If you look at the monthly chart for Hang Seng, I suspect that it will hit the log fib at around 0.76, which is going to be around 28,000. That's been my target for a very long time. And I think that there's a trend line here that it could be met. And I think that right now it's been forming higher highs and higher lows. And it also is probably just starting in terms of its bull market. Because one way that I like to look at cycles, look at the 20-month moving average and look at the Bollinger Band. And if you have a 20-month moving average that has flipped from resistance and you flip it to support, generally that kind of like how it did over here, from resistance to support, generally it supports a longer bull market cycle. And the bull market cycle doesn't end when you have Bollinger Band expansion. It usually starts ending whenever you start to get a little bit more tired and you have a little bit more contraction, but it generally doesn't end when you have like a full Bollinger Band expansion like that. This trend looks like it's just started. It looks like it wants to hit the 0.786 lock flip here around 28,000. Because of that, I think that we still have a ways to go up here for Hang Seng, which will end up providing the liquidity that is needed for at least a few more months of Bitcoin running up. Have you had the chance to look at like the Chinese liquidity, things like that? Any thoughts on that, Luca?
Yeah, I've been looking at it as well. I think that a lot of people are betting on the fall of the Chinese economy, and it definitely reached the bottom a couple of months ago,
Yeah.
right? I believe that we'll finally see a change in the high time frame trend for the Chinese both economy as well as the stock market. A lot of people unfortunately are betting on their fall. We saw their real estate market crashing a couple of years ago. So I think that they have reached the bottom, and a lot of people are still thinking about what has happened, but not about what will happen. What we see right now from the Chinese party is that they're starting to stimulate their economy. They are printing money, they're injecting liquidity in the financial system, and that, of course, leads to higher prices in both the Chinese stock market and other globalized assets like Bitcoin. Because liquidity, of course, will spill over like we've seen for gold. Gold
Hmm.
has been on an absolute run up as well over the last couple of months and years. And I think that a lot of that liquidity will also flow in Bitcoin as well.
Yeah. I feel that there's no denying. I think we're forming like a lot more higher highs here for the Chinese market. And based on just the past, like another argument I was talking to, you see how I think that the real top of the last cycle is really April 2021. You know why I say that is because even as Bitcoin is making a higher high here in November, the Chinese market was already tanking. You don't have that Chinese liquidity to help support further bullish movement, whereas this time it's different. It's still forming higher highs and higher lows. So that's to me, I think that's the fundamental difference between this cycle and why that fractal probably won't work out. That's one major reason as to why that is because of the Chinese liquidity that is still supporting the current run, but it wasn't last time.
Yeah, and there's
Um,
also the US economy that is supporting this
mhm.
because last time we had a transition into a quantitative tightening environment from a quantitative easing one. So
Yeah.
liquidity was shrinking. This time, however, we are seeing the exact opposite. We're seeing a transition away from quantitative tightening into quantitative easing. And the Fed will finally start to repurchase assets, to repurchase treasuries and so forth, and inject liquidity in the financial system. So if we have liquidity coming both from the Chinese side as well as from the US side, do you think we could have a prolonged cycle moving forward?
I think we can. Matter of fact, I actually think that the recent drop in the Nasdaq and SPY back in April was the liquidity grab that is much needed before we can go up higher. I think that there were issues back up here anyway. Back from August to December, whenever the QQQ or Nasdaq was going up, it was going on bearish divergence. So that's also when Bitcoin was also making its higher high, but it was kind of on a little bit of an exhaustion as well. So I think so far we don't really necessarily have that. We already have the exhaustion kind of play out, but if we go up, yeah, we're gonna have a little bit of bearish divergence here, but we're also building a lot of like hidden bullish divergence too to counteract with that. So I think the US market also probably has enough power to pump liquidity into Bitcoin as well. I do think that that's the case. Um, Another thing too is, like you said, when it comes to euphoria, I think the best way to illustrate that is look at the Bollinger Band on the monthly, on log scale. The reason why is it pretty much every single time when you have a euphoric bull market phase, you have the expansion of Bollinger Band fully to the upside to the downside. And especially the lower Bollinger Band expansion on when you look at it on log, it's really remarkable. Lower Bollinger Band goes all the way down to the negatives. Pretty much every single time when you have a euphoric bull market phase, right? Here it did that, here it did that, right? Went all the way down to like the negatives. We haven't really had that. If anything, I think we've been going sideways here for way too long, for like almost like a year, and the Bollinger Band is actually contracting, telling you that nothing has happened. Very, very similar morphology like we did over here, right? With contraction, and even though it's forming higher highs and higher lows, the volatility just really wasn't there. And I do wonder whether or not this fractal could play out where we have a Bollinger Band contraction here, and that can actually precipitate into a more volatile move up because we've been contracting here for so long that it might end up expanding whenever you end up having a more impulsive, upside. This is also part of the reason why I don't think that this fractal over here is anything like this fractal over here. One more thought, though, I don't think those are the same, is if I pull up an indicator called the Ichimoku cloud, and the way that Ichimoku cloud is calculated really is through like range averages, if you will. I'm not going to go into too much on the math here, but there are two lines, and then there's a cloud that gets calculated by that. The fast line, the leading line, is the blue line. We call it the conversion line, and the lagging line is the red line over here. We call it the baseline, right? Pretty much for bull markets, and the best way to illustrate that is 2015, 2017 bull market here for Bitcoin. Pretty much for bull markets, you ride the blue line on the way up, and every single time when it gets a little bit too far overextended, you backtest the blue line and keep going up. Here, during this bull market in 2020, 2021, it just kind of went up straight line here. But whenever it went too far too fast, it lost the blue line. Nowhere in 2021, it tried to reclaim the blue line here, but it just wasn't able to. And that's when the bull market ends, right? Because you lost the blue line and you're not able to hold the red line over here, and you just end up having the bear market happening, right? We're not having that morphology right now. If anything, it's just riding the blue line up, but it's just taking a lot longer to do that in a stepwise fashion. This is something that is forming higher highs and higher lows without causing euphoria.
Yeah, I think that retail interest has definitely been lower this cycle than in prior cycles. Something I've been tracking is the Google Trends. I'm sure you are tracking it as well. The interest for Bitcoin right now is at the same level it was back in the bear market. And that is truly fascinating to me that the
Incredible.
level of interest for Bitcoin right now is so low, even though we're at all-time highs, right?
Yeah.
And also, I think that the longer retail interest remains low, the higher the prices are going to go. Something that has been truly remarkable about this cycle is that it has been based on a wall of worry.
Mhm.
Basically, at every consolidation range so far, retail was extremely fearful. Retail was extremely anxious about the potential of a recession or the potential of a crash. And this was mainly a fear driven bull market. Therefore, I think that the levels of interest are so low. A lot of retail has capitulated along the way. there is still a lot of liquidity sitting on the sidelines currently, as reflected in money market funds making new all-time highs
Mhm.
currently. Therefore, I think that in the next couple of weeks, we have the true potential of going higher. A lot of people have hoped or believed that the cycle top is already in when we had that correction back in early April.
Mhm.
But since then, we have reversed, and now we're back testing the prior all time high. And a lot of people currently seem to be anxious, as we discussed earlier. So, yeah, I think that even though it may seem painful to bet on more upside, I'm guessing this is the contrarian view right now. A lot of people are saying that the cycle top is in. It could be more painful to say that there will be more upside than to say that, we're close to topping out for this cycle.
Yeah, not none of your positioning correctly, have exposure to it and not listening to fear narratives out there because honestly, liquidity looks like it's just going up and we're basically breaking through fib level and we're back testing it. I think that there are a lot of positives that are going on in the technicals that people just don't want to listen to. They rather listen to narratives. Um, but yeah, I think last cycle we ran real hard, went up to the 1.618 log fib, and I think we had a little bit of false breakout, and that was it. But I think right now we are not at that euphoric stage at those higher fib levels. I think we're still just barely breaking above all-time high at the 1.272, and we're basically back testing fib level after this recent breakout. I just don't see it. I'm sure that you probably have ran into my these Gann square charts to show like the market symmetry. And I think
Yeah, they're
that,
really interesting.
yeah,
Could you
they're
explain
pretty,
how they work?
yeah. So basically, these circles and these lines, they're more or less they're all fit based, and they're just a different way to illustrate. Like all these lines and curves, they're either based on fib levels or based on the number 45. And they basically are using 45-degree as more or less a way to create ways to look at market symmetry. And there are different ways you can use it. I'm not going to get into like too much detail, but you can do this in log scale. You do it in linear scale. I tend to do it in log scale. There's certain input that you're supposed to put in. I just type in these numbers and they just pop up for me once I choose like a pivot point. And when I did that for Bitcoin a while back, I can see that Bitcoin's been following market symmetry really, really well ever since like when I started this from November 2021. It basically every single time it gets to an arc over here, it was resistance. And when you break through a back test, it tends to go out to the next arc, and that would be the next resistance. And then the same thing would happen over and over again. Went up to break through this arc over here, back test it, and then just goes to the next arc here. Got rejected, came back, break through, back tested for like a whole year, and then it just went up to the next arc over here. Got rejected right there, came back, break through, back tested, right? If you're looking at the next arc, and I don't want to be like too crazy, but the next arc's like all the way up in like up here. It depends on where it hits, around like 600, 700,000, which I think is insane. There is a resistance line over here that's 200,000, which I think is more reasonable. And if you're also looking at the way that this happens along with global liquidity, in general, when you have a bear market, you have this is the M2 Global Liquidity Index. So this is like the M2 that is summarized by US, Japan, China, Great Britain, and Europe, European Union. Whenever you have a period of time where you have a hard time breaking above, that's when the bear market happens, right? Which makes sense because Bitcoin is extremely sensitive to global liquidity. Whenever you have a hard time breaking above like a horizontal resistance zone, that's when a bear market happens. Currently, we've actually had a longer liquidity cycle, and that shows on global liquidity because before you have resistance here for about a year and a half, 2 years, break above, back test, and then you ran, right? Here, that lasted for about another year and a half, breakthrough back test, and you ran. This one lasts for about 2.5 years. This is longer than it was before. Breakout, back test, and you're running right now. I don't think this is like topping behavior. I think if anything, based on fractal wise, the M2 Global Liquidity Index right here is very similar to this spot over here, which is prior to the run up for Bitcoin. Is also very similar to this spot over here, which is prior to the run up of Bitcoin during this parabolic bull phase. Because of that, this whole global liquidity, and we just spent a while talking about how Bitcoin runs on global liquidity. I think that we are still pending that parabolic bull phase. Does that help strengthen your thoughts, seeing these kinds of things?
Yeah, I definitely agree with some of the things you said there. But
No.
some things I've been thinking about is the correlation between Bitcoin and the global liquidity. So
Mhm.
something I've been tracking is actually back in 2022, the global liquidity going up, but
Mhm.
Bitcoin actually going down.
Yeah. Yeah.
So what do you think on that? What do you think that had happened? Because if we use the global liquidity there and we would have waited for it to top out,
Mhm.
then we would have mostly sold Bitcoin right at the bottom.
Yeah. I think that that's a very good point. The reason it actually also happened here around 2013 too, where gold liquidity continues to go up, but then Bitcoin starts to drop down. Didn't really quite happen here. But I don't think that it's going to be like 100% correlated. But I do think that there are maybe certain sector of the global liquidity, like the Chinese liquidity, I think that Bitcoin may be a little bit more sensitive to be honest. But to me, I think that I'm more interested in like the breakout phase. The top phase, I would be a little bit more hesitant to use global liquidity to try to call it top. I agree with you, based on the past experience. But with that said, if the Hang Seng goes down and is in a clear downtrend and the Bitcoin still goes up, we might need to exit.
Yeah, definitely agree with you on that. I think that the global liquidity gives us an indication on where we're headed next.
Yeah.
And by the use of multiple other confluences and analyzing on-chain data, market sentiment, the performance of altcoins, the story tells about risk appetite, how market participants are positioning themselves, I think we can gain a deeper understanding on where we're headed next. And global liquidity definitely gives us that indication, and also about the transition of the macroeconomic cycle as a whole.
Yeah, and I think it's just interesting that the global liquidity resistance had been lasting for longer than it was before. I think it might be because we just have a hard time going up on global liquidity because of like inflation and things like that. It's just turned out, this liquidity cycle just seems a little bit longer to me. I don't know whether or not you feel the same.
Yeah, definitely. I think that this cycle could definitely be different, but as the saying goes, never let your last words be that this time is different.
That is true. Those are dangerous words. You're not wrong.
Yeah.
As always.
Yeah, but this cycle definitely felt different. I mean, altcoins have mostly underperformed
Mhm.
for a long while.
Yeah.
We have asset class as a whole. Bitcoin
Mhm.
might be maturing. We have ETFs coming to the party. We have real institutional adoption. And I think that, we might say that this cycle might be different, but the real thing I believe it's currently happening is that the asset class is maturing itself. The volatility this cycle, even though the emotions have run high over the past few months, and a lot of people have been either really anxious or really euphoric, this has been truly one of the least volatile cycles. So I'm curious to hear your thoughts on that as well, on how Bitcoin is maturing as an asset class.
Yeah, I think that having institutional ownership and having all these extra financial instruments that you can use to play with Bitcoin, theoretically, you would think that it would reduce the volatility, which is again, this is now like common thoughts now, right? This is the whole like everybody's talking about Bitcoin having reduced volatility. It's not going to give you the same gains like it was in the past. Um, but to be honest, I'm not sure. Again, during spaces, I talked to you about like how Nvidia can also go down 80% and then just goes up like 1300%, within a period of 2 or 3 years. So I think that Bitcoin still has that potential. I don't think that the bull market potential has been reached quite just yet, and I think that we're just waiting for that global liquidity to come in from somewhere, maybe from the Fed balance sheets, maybe from China to really push this next leg up, and it might turn people's thoughts differently because everybody's being so complacent that Bitcoin's not going to do anything. I think that right now Bitcoin's actually holding at a very good area. Because if you look at this, this is like the daily chart here. I also can do a Gann square, and it's been working out very well. I've had this Gann chart really ever since like December of 2024. I've been following this market symmetry. It's just been bouncing between these two arcs here for a while. As soon as it bricked the arc here, it was using a 45-degree angle here as resistance and just pushed up, up, up. Eventually, it just broke the angle, and then it broke the horizontal Gann line over here, back test the line. It had yet to back test the angle. I was looking at it for a long time. I was like, it's gonna come back and touch it. It just did that yesterday, and again today. Could it break down? It can. If it breaks down, where's it gonna go? 101K. That's probably where it is. The other confluence too I have is also have like a weekly Gann here, which I also have been following for a very long time. And this also has been showing some pretty decent market symmetry. You see how this arc here. this arc here is resistance, arc here is resistance, arc here is resistance. As soon as it break out the arc, bounced off the arc, went to the next arc, was resistance here. Everybody was super euphoric here when it got to like six digits. Sure enough, came back, grabbed liquidity, pushed through, held the angle here again, and pushed through the arc back. That's the arc, right? I have a hard time seeing it really go lower than like 101K. Maybe if it goes down to the lower arc, that's fine too. I have a hard time seeing it getting lower than like 94K. There's just a lot of support over here, and I just have a hard time really seeing that area just breaking down like that, like what some people would expect it to do. The market symmetry just doesn't really support that based on what I'm looking at. But yeah, no, I just wanted to kind of show you why I also agree with you on the thesis. You know, it might be more like a back test of the breakout zone before going higher. I also see the same thing.
Yeah, I think isn't it funny how there is the most fear right when we test key support ranges? Isn't it funny that so many people highlight the potential of a bearish scenario right where we test one of the most important support levels?
It's natural. I think it's human and cat nature to do that. You're near support, you're worried that it's going to break down, and then you're near resistance, you think it's going to push through. That's kind of how people be thinking. I don't think human nature would ever change, which is why I don't think like AI or any other trading instruments, like people are going to override AI algorithms with their emotions when they want to trade. You know, if they want to lose like 100 million or something like that doing some leverage trade, that's fine. But it just doesn't really make a whole lot of sense to me, Luca.